Hello everyone and welcome to Moementum channel. My name is Mo, and in this video I'm going to review and share the top 5 best exchange traded funds ETFs for taking advantage of the disruptive technology here for Canadian investors. These 5 ETFs cover a number of key disruptive innovation topics, including autonomous electric vehicles, cybersecurity, cloud computing, innovation, and e-gaming. The first disruptive technology ETF that we're going to talk about is called Evolve Automobile Innovation Index Fund. This ETF is traded on Toronto Stock Exchange with ticker symbol CARS, C-A-R-S. As you can see here, it is Canada's first automobile innovation ETF, and given the fact that transportation is evolving so quickly, as you know, many countries in the world are transitioning from gas and diesel to electric vehicles in the years to come. That creates a massive opportunity for many companies that are active in this field to take advantage of that. And given the incredible technological advancement that comes with it, it also provides a great opportunity for a lot of investors. So the CARS ETF exactly is poised to do that, taking advantage of this disruptive innovation in the technology. As you could see, this ETF currently has a total asset under management of $75.6 million, and it consists of 34 key companies in their portfolio and in their holdings. It does pay a minimal dividend, currently sitting at the yield of 0.64%. You'd notice here, based on the pie charts, that large exposure for this ETF is to companies in the United States, but also it is still diversified, having companies in China, Britain, Japan, Germany, Canada, and so on. And as for the sector, there's some exposure to energy, some exposure to technology, consumer, cyclical, and industrial. We're also going to take a look at the holdings. As I mentioned, there are 34 companies in this ETF, but the top 10 you could see here on the screen include Fuel Cell Energy, Plug Power, NEO, ITM Power, Ceres Power Holdings, Ballard Power Systems, Power Cells Sweden, Vistion, GS Yuasa Corporation, and Umbrella Incorporated. All right, let us take a close look at the performance of this ETF over the past time frames. You could see here the one-day return for CARS has been 1.37%. The 1 month return has been 34.6%. 3 months return of 66%, 6 months return of 93%, and their performance since inception annualized is showing 38.9%, which is quite incredible for an exchange traded funds. The CARS ETF does pay its distribution, aka those dividends, on a monthly basis, and it does have a charge of 0.40% as the management fee. All right, moving on, the second ETF that we're gonna take a look at is called HERO, H-E-R-O, and it is actually traded on the Toronto Stock Exchange. It is Evolve E-Gaming Index ETF. It is Canada's first e-gaming and esports ETF. A little bit of context why this ETF would be very timely and one of the other disruptive innovation type of ETFs. 3/4 of all Americans have at least one gamer in their household, with over 164 million adults in the US alone playing video games. I think it goes without explanation that the e-gaming electronic games have become more and more popular, and there's huge demand for it. So this ETF essentially focuses on investing in those big name companies that are doing amazing when it comes to providing e-gaming and electronic gaming services and products to clients. This ETF consists of 79 total holdings. It is an index based, and as I mentioned, the ticker symbol is HERO. Currently have about $47 million of assets under management. It also does provide a distribution or kind of a dividend of 0.71% yield. Their overview shows that they pay those distributions on a quarterly basis, and this ETF charges a fee of 0.70%. If you look at the sector allocation, we have interactive home entertainment, large portion of this, followed by leisure products and interactive media and services, as well as application softwares. The top 10 holdings include Sea Limited, NetEase Incorporated, and Activision Blizzard. If you look at the top holding here, 𝐶 Limited, which is a Singaporean company, it has a weightage of 11%. If you go back and take a look at the stock price for 𝐶 Limited, which is traded on New York Stock Exchange, it was last traded for the price of $229.79. It was up 1.30% today. And their 1 month return, if you just take a look at it, has been an impressive 20% plus return. And their 1 year return has been an amazing 475% return for 1 year for this stock. Two things I want to flag for you here. First is the stock price is quite pricey, 229. So for many investors, this might be quite a bit of a price tag to be able to buy even one share of 𝐶 Limited. So that's one thing to consider. And the other piece is that when it comes to companies, sometimes, of course, it's not for sure. You're not going to know that 𝐶 Limited is going to do so well and have such an amazing run. Whereas if you buy instead an ETF, such as the one that we are introducing here called Hero, it actually gives you a lot more exposure to about, as we indicated, 79 different companies. And so although your returns might be lower, but it is much more manageable for you to buy because the last price for this is only about $38.94. So it's much cheaper for you to buy one shares of this ETF, yet get quite decent returns. So let's take a look at the returns for this ETF. Their 1 year return has been an amazing 66%. Now, it's nowhere close to 475% that we talked about for the company 𝐶 Limited, but nonetheless, it is an amazing return for an ETF. A lot of times, ETFs, or even if you broadly invest in the S&P 500, you're looking at much smaller returns. So this is quite an impressive return. And their return since inception, the annualized return since inception has been close to 52%. The next one that we're going to talk about here is 𝐗𝐈𝐊 Cybersecurity Index Fund. As you know, cybercrime is increasing day by day, and as a result, there's expected to be an increase in spending by companies on cybersecurity over the next 5 to 10 years. This ETF allows you to take advantage of that. It is traded on the Toronto Stock Exchange with ticker symbol 𝐶YBR. The last trading price for this ETF, which is index-based, was $48.04. It was down today. Nonetheless, it does offer as well some distribution of 0.32%. This ETF has a total of $211 million assets under management. If you scroll down, you can see it has a fee of 0.40%. Its dividends or distributions are paid out on a monthly basis. If you take a look at the portfolio here, a large exposure to companies in the US, and in terms of the sector allocation, we have technology being the majority with 56%, communication, and lastly, consumer and non-cyclical. If you look at the top 10 holdings out of the overall 51 holdings, we see CrowdStrike on the top, we see Palo Alto, we see Zscaler, we see Fortinet, and Okta among the top 5 holdings for this ETF. Now, if you scroll to the performance section and just take a look at how has the performance been for this ETF, the 1 month return has been an impressive 12.5% return. 3 months return has been 15.8%, 6 months return of 34%, and 1 year return of 56.85%. The total return since inception has been an impressive 29.97% annualized. Moving on, the next ETF that we will choose here is called 𝐗𝐈𝐊 Cloud Computing Index Fund. Cloud computing is transforming the global economy over the past decade. In fact, the cloud has fundamentally changed the way businesses and individuals across the globe access data. This ETF that is traded on Toronto Stock Exchange with ticker symbol DATA or DATA was last traded for the price of $20.48 Canadian. And it is an index-based type of ETF and holds 50 companies in its portfolio. The total assets under management is rather small, only about $3 million assets under management. So it has a lot of room to grow. If you look at their management fee, it has a management fee of 0.60%, and it has its monthly distributions if available. But at this time, you're saying that the target yield is not available. So majority of these companies actually are not paying any dividend at this time. Let's hop on over to the portfolio breakdown and geographic locations. Majority of it, 80%, are in the US, followed by Canada and Germany. As for the companies' holdings here, if you scroll down, the top 10 companies include Alphabet, Google, Oracle, Microsoft, Amazon, Shopify, Salesforce, SAP, ServiceNow, Intuit, and Zoom video communication. And finally, the last ETF on the category of best disruptive technology ETFs that we can recommend for Canadian investors include the 𝗖𝐊 Innovation Index Fund, or EDGE, EDGE. It does give your portfolio an edge, as the description provides, to innovation. As you know, innovation is a long-term key driver of global economic growth, and this is exactly what this ETF aims to provide to you. It was last traded for the price of $37.65, and it has $49 million assets under management, and this ETF offers you 47 companies as part of its holdings, and it has a target yield dividend distribution of 0.78%. Its distributions are shared on a quarterly basis, and similar to the other ones that we saw, this ETF also has a management fee of 0.40%. If we scroll over to the portfolio and take a look at the geographic allocation as well as sector allocation, geographically, 34% of the weightage belongs to companies that are scattered throughout the globe, followed by United States and China. And as for the sector diversity and allocation, we have future cars, cybersecurity, and social media among the top technological and sector distributions, followed by, of course, genomics, robotics, cloud, and 5G. Interesting enough, the top two holdings for this ETF include the exposure to two other ETFs that 𝗖𝐊 offers. The first one being the cars, the one that we talked about, as well as the cybersecurity one. So if you just buy the 𝗖𝐊 ETF for the edge, you're essentially getting already exposure to the other two ETFs. Keep that in mind. If you're considering to buying maybe a handful of these ETFs, you might just perhaps invest in edge because it gives you already exposure to those other two as well. Followed by Celltrion, Baidu, Pinterest, Samsung, Innovent, in terms of some of the other top holdings for this ETF. Let's take a look at the performance of this ETF compared to the other ones. So for edge, the one-day return has been 0.10%, 1 month's return of 11.4%, 3 months return of 20%, 6 months return of 42%, and their 1-year return has been 56.81%. Their total return since inception has been annualized 26.46% return. Quite impressive, I must say. There you have it, folks. A quick review of the top 5 ETFs active in disruptive technology and innovation field that are all offered by 𝗖𝐊, which is a company kind of led by a number of veterans in investment. And the beauty of all these ETFs are that they're all in Canadian dollars and perfect for Canadian investors out there that want to take advantage of companies that are in disruptive technology and innovation field. Let me know what you think. Do you own shares of any of these ETFs that I talked to you about in this video? What are your thoughts about the disruption and disruptive technology and investing in companies that are active in this field? Do you have such companies in your portfolio, or do you rather pick an ETF like the one that we talked about in this video and invest that way? I would love to hear from you. Be sure to leave me a comment down below and let me know what you think. By the way, if you found this video beneficial, please be sure to give it a thumbs up and share it with someone who might benefit from the video as well. The likes that you provide to the video really helps a lot with the channel to grow and allow us to kind of reach out to many more investors who might benefit from videos such as this one. And of course, please don't forget to subscribe to Moementum channel. Here on Moementum, we post videos about stock market investing, finances, and financial freedom. Our videos are not just for Canadian investors. This video will of course focus on that, but we post videos about various stocks, both for investors in Canada, US, as well as investors throughout the world. So hope you found this video beneficial. With that being said, thank you so much for watching this video until the end, and I hope to see you next time.